Hello and welcome to the Moore Kingston Smith Family Business Group podcast series. My name's Silvia Vitiello. I head up the Family Business Group, and today I've got two colleagues with me. I've got Guy Sterling, who's a tax partner in our private clients group, and I've got Rob Edwards, who's a senior financial advisor with Moore Kingston Smith Financial Advisors. We're going to have a look at some of the really topical areas that we're all talking, I think, with our clients today. The recent change in government and, of course, as we're recording this in September 2024, the upcoming budget. And there's a lot of things that are exercising people, I think, at the moment. And one of those is around their investments and how they protect and manage their wealth. So I'm going to start with you, Guy, because I know you've had lots of those conversations. Can you tell us, say, your top 3 tips that you're talking to people about at the moment?
Thank you very much, Silvia. Yes, so I'm having regular conversations with clients who have large asset holdings, and they're concerned on both capital gains tax when they sell the assets and also inheritance tax if they die while holding those assets. The first point of the capital gains issue to discuss is you only have capital gains tax where you have a transaction. So we are discussing with the client whether it is the correct time from an investment perspective, and that's not something I can speak about, but my colleague Rob can, as to whether it's a correct time from an investment perspective for selling the asset. So capital gains on transactions, so you have some choices. You can sell the asset. Selling the asset means you receive the proceeds, and then there is tax to pay based on current tax rates, which could change, as Sylvia mentioned, on 30th of October. Secondly, you can gift the assets to a close family member. The gift of an asset is still a disposal for capital gains tax purposes, and this can create what's called a dry tax charge, where you will owe capital gains tax, but you won't actually have received any funds to pay the tax. If the gift was of residential property and you haven't received any funds, there is scope for spreading that tax over 10 years. However, it does come with an interest charge. And finally, the area that I'm talking to clients about is transferring to a trust. Again, this is a disposal for capital gains tax purposes, but the gain can be held over, so it doesn't create an initial tax charge. However, it can create an inheritance tax charge if it's an individual gifting assets worth more than £325,000 or a couple gifting more than £650,000. So my top tips to clients at the moment are to look at what assets you're holding, look at what the potential tax would be on selling them, and also looking at, is it the correct time from an investment perspective to be selling the asset? So for that part, I pass over to Rob.
Thanks, Guy. Okay, well, Guy's looked at what you can do with the assets. What I'm going to look at is what the assets are. So if you've got assets in a portfolio, that's what's called an unwrapped investment, and that means it's not in an ISA or a pension, then there are options available. But as Guy has highlighted, it depends where you are both in your life and what the asset is. So a couple of years ago, after Trustonomics, a lot of assets went down, but they've now recovered. And these assets have a capital gain. But what we're not doing with clients, we're not proactively contacting them just to do a wide sweep of sale on the assets. We're considering, say if they're an older client, do they want to pass this on, as Guy said, either by passing on the asset or gifting the asset to one of their children. But we look really as well at what is in the asset. So is that asset, well, good performing funds? Well, it may be a case there where you want to leave it invested. There's no point in selling something that's performing well at the moment. But if the asset or the portfolio has underperforming assets, it's a good opportunity to crystallise those gains you've got in the asset and then enable you to start again by reinvesting or gifting on, as we'll talk about later.
Oh, thank you. Well, I think those are some really interesting insights. There's certainly things that I've heard us all talk about, just thinking about those things at the moment. And I think they are very much of the moment, and we'll probably be coming back with another update, I think, following the budget when it comes along. So I think at the moment what I would say is have a think about those areas that we've highlighted, and if you want to hear more or have some specific questions to ask either of my colleagues here or any of the people in our family business group, come to the Moore Kingston Smith website. We have a web page, lots of insights, podcasts, all sorts of things on there that are up to date, and also the contact details if you want to get in touch with anybody in the family group. Thank you.